What's happening at Goldman? This is now, if you don't want to answer it, I'm not going to bust your chops. I'm not going to answer it. So. But look, it's clearly a little this give and take between Lloyd Blankfein, the former CEO, the current guy, Solomon, and Lloyd going around saying he doesn't like the fact that David does whatever.
I will not be doing that.
But
whatever that may be.
Do you think David? Wait a second. Let me ask you.
I hope I'll be, enjoying my grandchildren.
You will be.
Okay.
But I need to ask you: is that guy getting a bad rap? Not you. I know you are, but David Solomon.
I think David has done a good job over time. I mean, it's obvious that there is a schism within the organization. I think David has led the firm properly. Mm-hmm. I think he's elevated the firm. The firm is a better firm today than it was 5 years ago. And so I don't know the inner dealings. I don't spend much time focusing on the other firms. I spend all the time making sure we're doing the job right for our clients.
Okay, we got 30 seconds left, Larry. What do you think is the most important thing this country needs right now?
Solidarity. We need to bring back hope. So many Americans are losing hope. And the polarization of opinions, of fighting, it creates more fear. There's more fear in America today than in my lifetime. Fear about the future. You're seeing that, declining birth rates in America. You're seeing that people are frightened of, is tomorrow going to be better than today? I know when I was a child, I knew that the future was going to be better than it is today. And I built BlackRock on that belief. We need that. We need hope.
Our stage guys are agreeing with you, by the way. I saw them shaking his head.
Thank you, Larry.
Bitcoin has climbed by about 20% since June 15th. That's when BlackRock said it was filing for SEC approval of a spot Bitcoin ETF.
For a while, everyone was sort of looking at crypto and they weren't as interested as they were in the pandemic. And now everyone's been talking about crypto ETF performance again this year.
Bitcoin extending its run higher, briefly topping $30,000. And it comes as Wall Street is giving the sector a vote of confidence.
This is just a week of excitement. That doesn't mean it's going to stay up next week. These things move really fast in this world.
Investors should take away that this is anything but bearish for the future of institutionally adopted, regulated cryptocurrencies, not just in the U.S. but globally.
So there's a lot going on here, and we're kind of getting a sense that it's maybe a winds of change for the sector.
Brady, what about the odds of the Bitcoin spot ETFs getting approval, right? Because they've tried
I say
this
no
before.
way in the Biden administration. I say no way in the Biden administration. That's my call.
Live from Bloomberg's World Headquarters in New York City, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the race for a spot Bitcoin ETF heats up. BlackRock and others with a flurry of refilings. A possible silver bullet to help get a fund across the finish line.
We'll talk to the CEO of CF Benchmarks about this rush for an ETF. The company is one of the world's leading digital asset index providers.
And a Bloomberg News scoop on bankrupt crypto lender Celsius. CFTC investigators conclude that the firm and its former CEO broke rules before the ultimate implosion.
All right, so all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And of course, as we've been talking about this rush to a spot ETF, that really has provided a boost for Bitcoin and other digital asset prices, but not so much today. Bitcoin down about 0.5%. We're still north of $30,000, but of course, this is part of a broader sell-off we are seeing in riskier assets. Ether 2 down at 1.3% as we're seeing stocks dragged down by the strong ADP jobs data we got earlier this morning. Feeds into the idea that the Fed's going to have to keep going for a while. The NASDAQ 100 to kind of illustrate that sapped risk sentiment is down by about 0.9%. One outlier I did want to point to, though, is Bitcoin Cash. This, of course, is kind of a derivative of the OG Bitcoin. It has seen a massive rally over the last several weeks after it was launched on EDX, that new exchange. It had a little bit of selling pressure over the last several days, but up about 8%. We understand South Korean traders may be behind a lot of that, but it is up about 200% year to date. That pretty much dwarfs Bitcoin's 80% year-to-date gain, though certainly that's nothing to sneeze at either.
No, I'm also starting to notice a lot more flows into crypto-related ETFs. I've got ETF Go up here, the function that we use every day on ETF IQ, and Eric Balchunas pointed out yesterday that we've seen 1 month flows of $533 million. Now, that may not seem like a lot, but if you look at the year-to-date flows here, you can see that we're only up $456 million. That means for the entire year, with the exception of last month, we've seen negative flows, a real pickup in June, Kaylee, as these ETF filings started to push investors into crypto-related ETFs globally.
Okay, so let's have more on that point. As we've been discussing, issuers are hoping to get across the finish line with approval for a spot Bitcoin ETF here in the U.S., and they've been busy refiling their applications after the SEC had indicated initial documents were insufficient. For more on the latest update, let's bring in Bloomberg's Vildana Heinrich. So, Vildana, what is the latest?
So basically, we've had this absolute flurry of applications from all kinds of issuers looking to get one of these spot Bitcoin ETFs out into the market, possibly in the coming year or so. But basically what's happened is that the SEC regulators went to the issuers and asked them for more information because the initial applications lacked a lot of the information. So some of them said they had intents to enter into so-called surveillance sharing agreements, whereby an exchange might provide pricing data and just more data so that the regulators can actually be monitoring the crypto markets, which they've said in the past, can be prone to manipulation and a lot of other worries. And so we've had a lot of issuers coming out refiling or amending their applications to say, okay, we'll be working with Coinbase, basically all of them listed Coinbase, as the exchange that will be helping them with this potential surveillance sharing.
I actually caught up with 21 Shares co-founder Ophelia Snyder yesterday on ETF IQ, and I asked her about the differences and similarities between a Bitcoin ETF and other commodity baskets. Listen to what she had to say.
Settlement is a lot faster. You're accepting physical delivery. It's a very different structure from that perspective. There are some peculiarities to do with crypto ETFs, and it's things like forks and airdrops and specific security issues and specific custody issues. This is not a copy paste from, hey, I've run a legacy commodity product. There's nothing new here. There are specific things that are new here, but they're now well understood and well documented, and there's a way to handle them that's actually very positive for investors.
So they've teamed up with ARK to file for an ETF in the U.S. They actually have 37 crypto-related ETFs globally. I think they offer some expertise that others maybe don't necessarily have in dealing with things like forks. That's not the kind of thing you have to deal with when you're putting together an ETF of gold or oil.
Yeah, actually, it's one interesting theory that I heard, because the question now is, if the SEC does grant approval for one of these or all of them, who would be first? Would the SEC say, okay, you can all go on the same day? Again, if approval does happen, because we do not yet have approval for a spot Bitcoin ETF. So the question really is, for issuers and also for potential investors, like, which one would they be going with? Like, do you buy BlackRock's ETF or do you buy Invesco's ETF? And one thing that I heard from people in the crypto space is that there's a potential for investors to actually want to go towards a product that is actually made and created and backed and issued by a crypto company, because crypto companies know the space really well, have been in the space for longer than, say, one of the more traditional players.
All right, Vildana, we got to leave it there, but thank you so much, Vildana Heinrich. We appreciate it. Now, speaking of one of those traditional players, of course, it was a behemoth institution, BlackRock, that kickstarted this wave of spot Bitcoin ETF filings, boosting overall sentiment in the crypto space along the way. And it was something that was discussed by the company's CEO, Larry Fink, yesterday. Take a listen to what he had to say.
We do believe that if we can create more tokenization of assets and securities, it could revolutionize again finance. And so we look at this as an opportunity. It costs a lot of money right now to transact Bitcoin, and it costs a lot of money to get out of that. And so we hope our regulators look at these filings as a way to democratize crypto.
Now, BlackRock's planned product would use a Bitcoin reference rate from CF Benchmarks, a digital asset index provider that tracks spot pricing and is a subsidiary of Kraken. I'm pleased to say that CF Benchmarks CEO, Sui Chung, joins us now. Sui, thank you so much for being here. How optimistic are you on approval of this product?
Hi, Kaylee, and thank you very much for having me. Yes, pleasure to be here. We're very optimistic that approval will be granted by the SEC because the SEC has consistently stated that it wants to see certain safeguards in place, particularly information sharing between the listing exchange of an ETF and crypto exchanges. That bar has been very clear, and we believe that bar is being met by the provisions that collectively we have all put in place.
I wonder what the surveillance really means, Sui, in this case. We've heard that in a number of filings now. Vildana's been writing about it. We just talked to her. How do you see surveillance of a spot Bitcoin ETF as any different from surveillance of other commodity ETF products?
That's an interesting question, Matt. So traditionally, commodity ETFs, the commodity markets, the spot commodity markets are not traded on organized marketplaces. Spot oil, spot gold is negotiated over the telephone, via email, via chat, etc., not on an organized marketplace. So historically, commodity ETFs, the listing exchanges of commodity ETFs have information sharing agreements with derivatives exchanges because that's the organized marketplace where transactions happen. Crypto is a little different in that spot crypto, physical spot crypto, is traded on organized marketplaces such as crypto exchanges. And hence, we haven't quite been here before. There's no exact parallel. However, in the relationship between spot markets, ETF markets, and derivative markets, that is a well-trodden path through something called the ISG, which has existed for a number of years now. And this is a forum by which ETF listing exchanges and derivatives exchanges share information.
So a lot has been made, for the past decade about the public blockchain, Bitcoin blockchain, and the fact that you can see exactly where all of the Bitcoin goes from wallet to wallet. Even if the accounts are pseudonymous, you can still see the numbers. Is that the kind of data that you're going to have to be watching to make sure that you don't, buy blockchain from criminals or release any to criminals? Is it just really a deeper KYC using on blockchain analytics?
Well, I can't speak for the exchanges that are listing ETFs and exactly how they will monitor and surveil the shares of the ETFs that they will list. I'm sure that they have very deep and detailed processes, but it could include that. It will also, of course, include being able to share information on exactly who has been trading the shares of the ETFs and who has been trading Bitcoin on those markets of significant size.
Well, Sui, the SEC's concern historically has surrounded the idea of potential manipulation in the spot market. You at CF Benchmarks literally track spot pricing. Have you seen any evidence of that?
I think that we as an FCA-regulated benchmark administrator, we actually have a burden upon us, an obligation to surveil our benchmarks, to ensure that our benchmarks are free of manipulation. So we have policies, processes, systems in place that have been approved by the FCA here in the UK for all of our benchmarks that we publish. Now, as you know, the Bitcoin reference rate has been published for 7 years now. And almost 6 years, it has been used as the settlement mechanism for the Bitcoin dollars futures contract listed on the CME. So we have settled over $500 billion of CFTC regulated derivatives contracts listed on the CME using our benchmarks, and we have never, ever had an instance of the manipulation of our benchmark.
Okay, never ever. That's the direct quote. Finally, if the SEC is able to put aside those concerns and ultimately does grant approval to either BlackRock's product or another that has filed for approval over the course of the last month or so, Sui, what do you think the real difference it's going to make is? How substantial will the impact be? Because it's been a lot of hype. I just wonder what actually happens if it happens.
Well, obviously, Kelly, that is the some large number billion-dollar question. It's very hard to know just how much demand there is. But if we look at, I think we can kind of triangulate to that number. If you think that, ETFs are the wrapper of choice, they are the vehicle of choice now for investors in the US, regardless of whether that's private wealth, whether that's long-term savings in the form of a 401k, et cetera, ETFs are the wrapper of choice. And about 50 to 60% of all US investors hold an ETF, at least one ETF in their portfolio. Now, you put that next to the fact that 20% of American investors now own crypto, physical crypto. So you've got 80% who still don't, and that 80%, if you cross-reference that with the 50 to 60% that own ETFs, if you have a Bitcoin ETF, a spot Bitcoin ETF, well, you do the math and you come up with a pretty big number.
Sui, it's fascinating stuff. We really appreciate you joining us. Sui Chung there of CF Benchmarks talking us through the potential for a spot Bitcoin ETF. Coming up, that cryptocurrency is falling a bit after hitting a one-year high. It's still above $30,000. We'll catch up with Stillmark's Elise Killeen for where it goes next.
Plus, the CFTC is said to have concluded that Celsius and its former CEO broke U.S. rules. We'll have more on that Bloomberg Scoop ahead.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
I think Bitcoin has a lot of tailwinds at the moment, partly because it's not named in any of these suits as possibly a security. It's not under attack. You don't see any of the Bitcoin-only companies being, sued by the SEC, for example. That's clearly supportive for Bitcoin. But also, you still have that same macro environment, right? I mean, it's evolving, of course, but there's still a lot of reason to be interested in a non-sovereign, global FX.
That was Alex Thorne on our program last week. Let's dig into the growing optimism in crypto with Elise Killeen, founding partner of the crypto venture capital firm Stillmark. And Elise, I think it's fascinating you heard Alex talk about that. Clearly, the SEC isn't after Bitcoin or Bitcoin-only firms. Nonetheless, when you have 2-year yields above 5%, 10-year yields above 4%, it seems interesting that investors are still interested in, commodity that doesn't yield anything. Bitcoin's still hovering around $30,000. Does it make sense to you?
Well, Bitcoin is up approximately 85% this year, which of course means that it's outpaced gold, it's outpaced S&P 500, and it's still 50% off the all-time high it established in late 2021. Now, the price has been benefited by event-based tailwinds. Earlier in the year, we saw the SVB problems result in a revelation for many around Bitcoin's core value proposition of the ability it creates for people to be their own bank, which the value proposition, of course, became more clear with the banking crisis earlier in the year. More recently, the BlackRock spot ETF filing has also created this event-based tailwind for the price. Now, this has been specific and distinct to Bitcoin, and as a result of that,
We've seen it increase in its market dominance in the digital asset space. So it's a very dynamic time for Bitcoin.
What do you think is the ultimate killer app for Bitcoin? I mean, we heard Larry Fink yesterday on Fox Business talking about the tokenization of everything. That's been a mantra, I think, for believers over the last year. But it could be done with some other blockchain that doesn't have to be Bitcoin, right? What's the point of this, digital gold?
Well, so of course, when you're talking about the digitalization of an asset that you expect to hold for any term, the underlying blockchain is going to matter a lot. What you're going to be looking for when you digitize an asset, of course, is to find a stable, secure, and reliable underlying blockchain. And historically, that's only been Bitcoin. So what I mean specifically by that is that Bitcoin's uptime is unparalleled. It's at something like 99.999%. There's been no breach at the protocol level in well over a decade, and it's reliable. And what that means is that the hard rules, the important rules that define the protocol and people's expectations of it haven't changed and can't change by a unilateral movement of a single individual or foundation or team. And so it actually can't happen on other protocols, at least not easily. We've seen that Bitcoin sidechains, and in particular Blockstream's Liquid network, has matured to offer much greater and deeper functionality and to enable things like the digitalization of other assets to happen in a secure Bitcoin environment.
So, Elise, as we talk here about Bitcoin, which of course is by far the largest cryptocurrency, as we're talking about potentially a spot ETF here in the U.S. that may get approval, Bitcoin spot specifically, as we're talking about those same regulators cracking down on exchanges, for example, for facilitating the trading of things that they deem to be securities, everything basically except Bitcoin. Are we in a world of Bitcoin versus everything else?
We're in a world where the difference between Bitcoin and everything else is more clear. So, of course, with the SEC action against exchanges, trying to bring exchanges into compliance with existing regulations, we saw that the SEC applied securities regulation to currencies associated with entities like Axie Infinity, Solana, Filecoin as an example. And Bitcoin stands distinct from that group for a few reasons, including that supply and issuance schedule is not controlled by a foundation or team, which is different for the tokens that the SEC outlined in its actions against Binance and Coinbase. Now, on the flip side, the spot ETFs being advanced by some of the most sophisticated financial institutions in the world target Bitcoin. As you said, it's Bitcoin and not crypto that's being advanced in this first set of spot ETFs. And as a result of the sophistication of these players and their experience in dealing with SEC, we've seen a great sort of feedback and activity loop between filers like BlackRock and Fidelity and the SEC. And that makes the market optimistic that this ETF will ultimately be approved in the coming months or coming quarters. And what we expect to see from that, and the market has reacted, is a significant inflow of capital to the space.
All right, we'll see if that transpires. Elise, that's all the time we have, but thank you so much. Please come back soon. That's Elise Killeen of Stillmark. We appreciate your time. And coming up, we'll have more on the Bloomberg Scoop that investigators at the CFTC have concluded that bankrupt crypto lender Celsius Network and its former CEO broke the rules. This is Bloomberg. The CFTC has concluded that bankrupt crypto lender Celsius and its former CEO broke the agency's rules ahead of the company's implosion. This is according to a Bloomberg News scoop, and Bloomberg's Allison Vershbrill broke that news and joins us now. So, Allie, what do we need to know?
So, as you mentioned, the investigators have concluded a number of things. Specifically, they concluded that Celsius misled investors. They concluded that they failed to meet certain registration requirements, and that also Alex Mashinsky, the former CEO, broke agency rules as well. So basically what that means is that we're at a very late stage of all of this. We knew that this investigation was ongoing for the last couple months, but if the commissioners decide to vote and they agree that an enforcement action should be taken, then we could see a filing as soon as this month.
And Allison, I love your story. You point out that there have been a ton of cases, and they've actually gotten $4 billion back thus far.
Yeah, so there have been a lot of cases from the CFTC. They were actually the first one to bring a lawsuit against Binance Holdings Ltd, which is, obviously the world's largest crypto exchange. We've also seen a number of cases from the SEC, including against Coinbase recently. So this is by far not the only crypto case that we may see, and I'm expecting that enforcement will continue in this industry.
Yeah, 85 enforcement actions by the CFTC. Allison Verspril, thanks very much for your reporting. That's all for Bloomberg Crypto. Coming up next week, we're going to talk with Tim Draper, legendary venture capitalist from DFJ and an early investor in crypto infrastructure. This is Bloomberg.
Today, Bitcoin hits a 13-month high amid the institutional interest in crypto. FTX objects to BlockFi's bankruptcy plans, and Ether Capital CEO Brian Mossoff weighs in on the recent burst of applications for spot Bitcoin ETFs here in the US. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices are pretty much flat today, with Bitcoin rising slightly, trading around $30,400 at around noon Eastern. Earlier this morning, Bitcoin touched a 13-month high following comments from BlackRock CEO Larry Fink on the firm's application for a spot Bitcoin ETF. Specifically, Bitcoin climbed to around $31,450, but gave back those gains after better than expected jobs data increased investor concerns around the path of interest rates. As of noon Eastern, Ether dropped less than 1%, trading close to $1,900. Polkadot also dipped, trading at $5.15. Okay, let's talk about the top stories. The CFTC reportedly thinks that Celsius and its former CEO Alex Mashinsky broke U.S. rules by misleading investors. Bloomberg reports that the Commission's enforcement unit found that Celsius should have registered with the CFTC and that Mashinsky also broke rules. It also reports that the agency could file a federal court case if a majority of commissioners agree with the unit's findings. Now, we reached out to the CFTC, Celsius, and a lawyer for Alex Mashinsky, but haven't heard back yet. At the same time this is happening, Celsius is still moving through with its bankruptcy, including a deal with a group of buyers dubbed Fahrenheit, which will take over the company, give it about $500 million in crypto, and build mining facilities as part of the new business. Next, Valkyrie refiled with the SEC for a spot Bitcoin ETF, and it plans to use Coinbase as its surveillance partner to detect market manipulation. We told you yesterday that BlackRock also refiled its application and mentioned its own surveillance sharing partnership with Coinbase. The Wall Street Journal reports that the recent refilings come after the SEC felt the initial filings were inadequate. Valkyrie said Coinbase is the operator of the largest United States-based spot trading platform for Bitcoin, and that's the point that BlackRock also alluded to, noting that the exchange represents a significant portion of US-based Bitcoin trading. Last, FTX just objected to BlockFi's bankruptcy plans. In a filing submitted on Wednesday, FTX and its debtors claimed that it's fighting an attempt to subordinate or devalue their claims against the bankrupt crypto lender. FTX says BlockFi can't wave a magic wand and make the claims disappear. Bankrupt crypto hedge fund Three Arrows Capital also objected to the plan on July 5th for similar reasons. The SEC filed its own objection over which members of BlockFi's management would get releases. We reached out to BlockFi about these objections, but haven't heard back. All right, we told you earlier that Bitcoin touched its highest level in 13 months as the drumbeat for institutional demand grows louder. So for our main story, Crypto World's Talia Kaplan spoke with Brian Mossoff, the CEO of Ether Capital, which helped launch the world's first spot Bitcoin and Ethereum ETFs a couple of years ago. He weighs in on the recent burst of applications for spot Bitcoin ETFs here in the US and what it means for the industry.
We've been hearing a lot about crypto ETFs recently. Last month, BlackRock, the largest asset manager in the world, filed for a spot Bitcoin ETF. Other financial institutions like WisdomTree, Invesco, and Fidelity also proposed their own applications. But more than 2 years ago, your company, which is based in Canada, actually helped launch what you say was the world's first physically settled Bitcoin ETF. At the time, you called it a groundbreaking investment vehicle. Why did you think this was important back then? And what do you make of this recent push into crypto from financial institutions? What do you think that signifies?
We built the world's first Bitcoin spot ETF with Purpose Investments a couple years ago because it's clear that the asset class is here to stay and people are looking for exposure points. A structured product like an ETF is more tax efficient. It abstracts away things like custody risk for the end user. And so for those who are institutions or retail investors who don't want to take on signing up on exchanges or figuring out how to custody the assets on their own, it's a far cleaner access point for those individuals. There was renewed interest in the space, certainly in the second half of 2020, as you saw Bitcoin go from just under $10,000 all the way up to in the mid 60,000 US range. And so we ended up with over $1 billion into those products. Alongside the Bitcoin ETF, we also launched with Purpose Investments an Ethereum ETF. And so, people are looking for access points. In the second half of 2020, there was renewed interest in the space following a prolonged bear market for a number of years. And I think as we move into the latter half of 2023 and 2024, you're seeing large US asset managers again recognize that the asset class is here to stay. They're going to be creating access points that their clients are going to want to purchase exposure through. And that's a good thing for the industry, and it's a good thing for the investors. It's good all around. Now the question is, when will the SEC be comfortable with bringing that type of a product to the US market?
Overall, has there been a lot of demand for your spot Bitcoin ETF and your Ethereum ETF since it was launched back in 2021?
Certainly at the outset of the ETF launches during a bull market, there was a lot of interest, a lot of money flowing into those two products. As things changed in the latter half of 2022, there was less buying and less intraday trading, but that's fine. These things ebb and flow, and crypto certainly moves in cycles. We're currently probably leaving the bear market and about to enter some type of bull, or at least sentiment is turning more positive. And so those products are on the shelf and they're there for when people are ready. Ether Capital, my company, is staking our own treasury. I think we're one of the only access points in the capital markets for staking exposure. And so again, we just need more of these type of products for investors to be able to access. We want them to be able to choose which access point is appropriate for their needs, what they're comfortable with tech-wise, and then they can go out and either sign up on an exchange and buy the assets direct. They can look for something that's tax efficient or something that takes care of the custody on their behalf with the right disclosure and the right type of trading activity, and then buy that way. And so whether this stuff happens in the next few months or it takes another year to go through, I don't think it really matters. If the SEC drags their heels a little bit for the time being, that's okay. Eventually, one of these ETFs is going to get through. And again, that's a great thing for the industry and the investors.
Overall, what do you think investor appetite is for structured products right now compared to holding the assets directly, especially amid the current regulatory environment?
I would say that investors may not be looking necessarily at structured products today. The people who are buying the assets direct are usually ones who are a little bit more tech comfortable. Maybe they're a bit more internet native. And so they're buying whether it's in bull markets or bear markets. Those people are following the industry on Twitter and deciding that they want exposure in their portfolios to the sector. The professional investors or retail investors who aren't following the space, who are more likely to buy a structured product, they may come at some point later. So I don't know if an ETF were to launch today in the US, if it would see billions of dollars of inflows on day one. But again, that's okay. It'll happen when the sentiment continues to shift positive. Where the sentiment exactly is at currently, I don't know is that relevant. I think there's big catalysts on the horizon. When one of these ETFs gets approved, that'll be a very big deal. And the largest market in the world and one of the strongest crypto development communities is right here in the US. And in 2024, we have events like the Bitcoin Halving, which is where the block reward, which happens every 10 minutes, this is new Bitcoin being created, that gets cut in half. And if you look historically at these halving events, which again take place every 4 years, they usually act as positive catalysts for price momentum to the upside. It may not happen the day of the Bitcoin halving, but they happen within a few months. Doesn't guarantee that it'll happen again, but it is something to look forward to. And as we start to see clarity around the regulation in the space, you've seen the EU put in place some new rules. Japan is leaning into the space, so is Hong Kong. And the US is going to sort itself out. And those are all positive things for the industry. And those who don't have exposure yet, who have been sitting on the sidelines, will feel more comfortable that the assets are here to stay. And they'll start to have more conviction and decide that it's time to have some exposure inside of their portfolios. So what happens in the short term is anyone's guess, but I think as we move to the second half of this year and move into 2024, there's a lot of things to be excited about in this industry.
So this week, we learned BlackRock refiled for its Bitcoin ETF after the SEC found flaws in its initial filing. So given your experience in the space, I know you touched on this, but what do you think will be the outcome? The SEC so far has not allowed a spot Bitcoin ETF to launch in the US. In fact, the agency is currently in a legal battle with Grayscale over whether the company will be allowed to convert its Grayscale Bitcoin Trust into an ETF. So what do you think will happen with BlackRock's application specifically?
My prediction will be that the SEC will continue to drag this out until they're comfortable or feel that it's ready to greenlight a spot ETF. Whether that happens in a few months or early next year, I'm not sure. But the pressure is on. If you were a government or a regulator, you should be in favor of ETFs because you know where the custody of the assets exist. When retail investors go and buy the assets on their own, it could happen on an unregulated platform. It could happen in a self-hosted wallet. It's harder to monitor the behavior versus saying, we understand that people want exposure to the price movement of these assets, and we'd rather them do that through a regulated product than through something that they can't monitor with as much ease. So there's a lot of reasons that government should lean into these ETFs, why regulators should be saying it's time. We understand that there have been filings for over a decade now. If you look at the Winklevoss brothers, they filed for an ETF where it could have been called a trust back then. That was 2013. So we've seen a number of filings come before the SEC. It was a far more nascent industry back then. There were a number of filings along the way in the 2017 and kind of 2018 era. And now we're here in 2023. You have $1 trillion worth of assets that are sitting in the industry. There's successful businesses. There's been businesses that have collapsed that weren't regulated. And so bringing more products to market that investors can have confidence in, that are appropriate, that are letting them invest direct in just the protocol assets versus equity in the companies, that's a very good thing.
Mosaf also provided his outlook for both the price of Ether and the volume of Ether staked. You can catch the full interview over at cnbc.com/cryptoworld. That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.
Dave, I want to switch the subject up. Bring us up to date on the Bitcoin ETF filings. We talked about this. Don't laugh. I have you here because that's why you're here. We did this last week. We had the BlackRock and Fidelity's now jumping in. So handicap this one for us. Will this one get the go-ahead? And if so, why? What would take it over the top?
Well, everybody refiled, depending on how you read the paperwork. Most of them refiled on Friday. Some of them claim to have refiled a little bit earlier. All of them are now talking about having a surveillance sharing agreement with Coinbase, the largest, Bitcoin USD dealer in the world, largest Bitcoin exchange in the United States. And I think there's this idea that somehow BlackRock knew something and that the SEC is on the verge of proving this once these surveillance sharing agreements are in place. I'm still fairly negative on this. I think we've reset the clocks here. It actually puts the ARK and 21 shares out ahead if they follow the letter of the filings. But I think what's most likely to happen is we're going to get a response from the SEC that says new filings and SSAs have to look like this. Everybody please refile by X date, and then they'll make a decision. I think it's unlikely that they simply anoint a single winner and say, hey, BlackRock, you get to go out to market a week before everybody else. We all know what that looks like. In this market, being first really, really does matter, especially if first comes under the umbrella of somebody like an iShares BlackRock. So I think the odds are still negative for this year, but certainly things look more positive than they did maybe 3 weeks ago, 6 weeks ago.
I would certainly agree that they're not going to approve BlackRock suddenly and ignore everybody else. That would create a real howl. But I think the real question is, what's different here? Do you think this surveillance agreement, this Coinbase surveillance agreement, really is enough to satisfy their objections about fraud, custody issues, and all of those things? Is that by itself going to do it?
It shouldn't be, based on what they've said before, the words out of their own mouth, not just about Bitcoin, but about other markets where they've established surveillance sharing agreements. There's a level of scrutiny that's involved that I will be surprised if Coinbase can meet the mark on. However, if what's really going on is the SEC is looking for a get out of jail free card, they know they're going to lose or think they're going to lose the Grayscale lawsuit. They're looking for a way to say something positive about all this. If they're trying to manufacture a way to approve a Bitcoin ETF, this would be the way to do it. It would still be a big shift from what they've said in the past.
You have written, Dave, and implied that Grayscale might actually have a chance at winning. Why would they have a chance at winning? And I would agree, if they have made a calculation, they might lose. This might be a backer way to, sort of smooth things over. But why do you think Grayscale has a good chance of winning?
Well, if you actually dig through the case as an impartial observer and you look at the facts being presented to judges, 3 judges in this case, I think it's quite reasonable to say that the SEC has been arbitrary and capricious in how they've applied certain rules. Now, that doesn't mean that they necessarily approve the conversion of GBCT to an ETF, but I think they can still lose that lawsuit that says, hey, you've treated somebody unfairly under the Administrative Procedures Act. So that's a real case for them to lose. It doesn't necessarily mean they flip the switch and all of a sudden it's trading as an ETF. That's a much more complex process.
Yeah, I must say I have a problem with this argument that they approved a Bitcoin futures ETF, therefore they must approve it, a spot Bitcoin. In a futures product, you have a closed ecosphere, essentially. You have positions, you have long and short that can be easily monitored, and you don't have that in the Bitcoin ETF, the spot Bitcoin situation. So there's a difference here, it seems to me. Even if you can make an underlying argument, well, if there's fraud in a spot Bitcoin, there would imply there'd be fraud. Do you get my point here? I'm not sure that it's the same argument.
It's actually sort of backwards. When they originally rejected some of the filings back in 2018, what the SEC said was, historically, when we've approved commodities spot products, there has been both a spot market and a big futures market, and the combination of those two is what gave them solace to approve those products. But then they went ahead and improved the futures product and not the commodities sort of spot product. So they've sort of talked out of both sides of their mouth on this. I think it's unlikely that they're going to win, largely because of details in the case. I agree with you. They're different markets, and it's actually, I think, reasonable to say you can trade futures, but you can't trade spot. We say that about oil, and nobody has any questions about it, right? Because there are mechanics of the oil market that don't let you do this. The mechanics of the Bitcoin market are much more like gold, and therefore it's much easier to do. Storage is trivial compared to oil, but I think it's still likely they're going to lose.
At least 3 senior officials at Binance have departed the crypto exchange this week as the company prepares to defend itself on multiple fronts. This is according to a report by Fortune. Joining me now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning.
Happy Friday.
Dan, too, yeah.
Thank you very much. It's not a happy Friday for Binance. The publication said Binance's general counsel, chief strategy officer, and SVP for compliance are among those who resigned. Bloomberg is reporting the chief business officer at the company also left. What's happening at Binance? Why are we seeing this exodus?
Yeah, so, multiple executives leaving at roughly the same time is never usually a good sign. Fortune is saying that these departures are in response to CZ and Binance's response to possible pending, U.S. Department of Justice action. It's been rumored for a while now that the DOJ has been investigating Binance, and, with the lawsuits from the SEC and the CFTC this year, it's very possible that the DOJ action, which will be, likely more serious just because of possible criminal penalties, is coming, much closer than either of those other investigations have been.
Now, CZ responded on Twitter last night. What did he have to say?
Well, obviously, he denied that it's a bad thing. Generally speaking, CZ has taken this tack where if there's any negative news about Binance, he downplays it as FUD. He basically took a very similar track in a very long tweet yesterday. I'm not going to read it out loud, but I think you have it on the screen there. Mm-hmm. He's saying that, this happens. Patrick Hillman likewise similarly put out a statement, also in a long-form tweet, saying that it was simply time and not, denying that it had anything to do with possible DOJ actions or, the company's business as it is.
Seems like an odd coincidence. But let's talk about the future for Binance. It's under investigation from multiple regulators around the world. What could happen next for the exchange? It's still the largest exchange internationally by trading volume. What do you expect to see happen for them?
I guess the big question is whether or not the U.S. DOJ will file a suit and bring charges. One of the rumors that is circulating right now, or one of the theories rather, is that the DOJ is holding off because, oftentimes it won't reveal charges. It'll file them under seal until they're able to arrest the subject that is named. That could be one of the things that's happening right now. So we don't know for sure if the DOJ has actually brought charges or not. That's just one of the options, possibilities. As far as Binance itself, we've talked earlier this week about it being searched by Australian regulators. We've talked in the past about French regulators taking a look at the company's business. Regulators around the world are clearly taking a much closer look at Binance right now, and it doesn't seem like this is going to settle down anytime soon.
All right, Nick, thanks for joining us this morning. I'm sure you'll be back next week with an update on what's happening in the Binance saga. It seems we get news every day on this. That was CoinDesk Global Policy and Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
So I told you at the top of the show, the S&P's 15% gain year to date. Nothing to sneeze at, but check out this comparison. Since the start of 2023, Bitcoin has pulled off an absolute moonshot. The crypto record has soared 83%, with a good chunk of it coming since June 15th. That's when BlackRock, the world's largest asset manager, filed an application for a spot Bitcoin Trust ETF. BlackRock's iShares joins a crowd of fund managers from ARK to Invesco, VanEck, Grayscale, all these other fund companies that have been desperate to do the same, but they've been turned away by the SEC's bouncers, namely Chief Bouncer Gary Gensler. BlackRock's first application actually has already been kicked back. The SEC demanded it name a surveillance partner to spot things like fraud and manipulation. And late last week, BlackRock and NASDAQ refiled, naming Coinbase as the custodial surveillance partner of the spot Bitcoin Trust. The crypto world pinning its hopes on BlackRock, which has a track record regulators say they find too good to reject. At least that's what people think. BlackRock's 576 ETF applications, 575 have been accepted, and just one has been rejected. I know you're all asking which one. I'll tell you later. It was in 2014. As the entire crypto sector waits and watches, joining us now in a Fox Business exclusive is BlackRock's chairman and CEO, Larry Fink, along with Charlie Gasparino. Great to have you, Larry.
Liz, Charlie, it's good to be here on a summer day.
Yeah, and we're cool in here.
We are.
Larry, I know that per SEC regulations, you cannot get into specifics. But as you look at all of your track records when it comes to iShares and approvals, how do these things work out? How long does it take? And what do you think odds are of any of your ETFs that you float getting accepted?
Well, we try to do what's right for the long-term investor, and I think we have a good track record working with our regulators and trying to making sure we're thinking about all the issues around any filing. And so I can't get into the specifics of this filing, but I think the chart speaks quite well. We work really closely with our regulators, and we want to hear from the regulators what are their issues and how can we fix those issues around that. So we hope that, like in the past, we could be working with our regulators and get the filing approved one day. And I have no idea what that one day will be, but and so we'll see how that all plays out. Specifically on Bitcoin, as I've said in the past, we're a believer in digitization of products. ETFs was a big revolution for the mutual fund industry, and it's really taking over the mutual fund industry. And we do believe that if we can create more tokenization of assets and securities, and that's what Bitcoin is, it could revolutionize again finance. And so we look at this as an opportunity to move one step further in terms of providing investors fractions of shares, fractions of this, democratizing the cost of investing. Over the last 10 years, we've lowered the cost of iShares ETFs by 30%. So what we're trying to do is make it more accessible, more easy. The attempt in terms of what we're trying to do with crypto is make it more democratized with all the crypto and making it much cheaper for investors. Right now, the bid-ask spread for crypto is very expensive. It does erode a lot of the returns that you speak about because it costs a lot of money right now to transact Bitcoin, and it costs a lot of money to get out of that. And so we hope our regulators look at these filings as a way to democratize crypto, and we'll see in the future how that plays out.
You were never a crypto skeptic like Buffett. Buffett and Charlie Munger come out and they say all this bad stuff about it. But you were kind of skeptical.
Yeah, I was skeptical because the early users it was heavily used for, let's say, illicit activities. And I think as it became more accessible, and also I do believe the role of crypto is it's digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country or the devaluation of your currency, whatever country you're in, let's be clear. Bitcoin is an international asset. It's not based on any one currency. And so it can represent an asset that people can play as an alternative. I would call the foundation of BlackRock is about hope. You invest for retirement because you believe tomorrow is better than today.
Right, but hasn't the technology sort of diverged from the value of the digital coins? I mean, I don't know a lot of people who use the blockchain. That's the Bitcoin technology to transact. I know a lot of people hold Bitcoin. You don't hold Bitcoin, right?
I don't own anything other than mutual funds and
BlackRock,
ETFs, BlackRock shares.
Okay, but you see what I'm saying? There's been advancement. There's a utility, it seems, out of nowhere about this digital coin. I don't see the utility in the underlying technology, and isn't that bad?
Well, no, I actually believe the underlying technology is fantastic because the blockchain will help you accelerate the processes of transactions. The blockchain will help you identify. I mean, let's be clear. If you have a pure blockchain and you have knowledge of who the buyers and sellers are, we could then, we don't need custodians anymore. Okay. We don't need, the whole process of finance. Some of the intermediaries are broken down. And so this is why we're all studying.
There, but we're not there.
We're not close to there.
Well,
but it's an advancement of technology. Yeah, I mean, it's no different than the spirit around AI and what AI can do.
Larry, as we look at the broader market here,
right.
We have come out of a bank crisis. I don't know, it was a mini
crisis,
fit or something like
that. A little
that.
mini
It didn't feel mini to the banks that went under, three
Correct.
of them.
Yes.
But the very issues that put those banks under, whether it was bank management in relation to higher interest rates,
Correct.
have not gone away. Now we've got the roller coaster coming right at commercial real estate.
Yes.
Are there more banks that you foresee failing, whether they are the regionals? We just talked to David Rubenstein at the top of the show,
sure.
and he thinks maybe in a couple of years we will see some of these go away.
We have 4,400 banks. We have more banks in the United States than any country in the world. We believe in local banks, so we have a strong foundational belief that local banks are good. But to have 4,400 maybe is too many. Liz, you framed it perfectly. I believe interest rates are going to continue to go higher. I think the Federal Reserve is going to have to do minimum of 2, but maybe as much as 4 more tightening.
4 more rate, 25 basis points.
25 basis points, another 100 basis points. I actually believe inflation is stickier and more structural. And so I see a future of higher interest rates. Higher interest rates is going to create more stress in commercial real estate. Mm-hmm. Commercial real estate is the largest asset category of regional banks. And so there may be stresses.
That's a problem.
But the first 3 banks did not have stress on credit. They had stress on their mismatch of their assets and liabilities. Could we move towards more of a crisis towards credit? Absolutely. Is that systemic? Probably not. It's not. It doesn't have to be systemic.
It's not the big banks. I mean,
it's not the big banks. And more importantly, the economy is really strong now and getting stronger. It's not getting weaker. We have the 3 large stimulus packages that were enacted over the last year, the Infrastructure Act, the CHIPS Act, and the IRA. It's all just starting the J curve. This is going to, and it was $1 trillion over many years, though, but of stimulus. It's just entering the economy.
Some say it's been too much.
Yes, but it's entering the economy at the same time.
Where are we in the cycle of spending that? Do you know? Halfway, 3/4?
5%.
Whoa! That's it.
We're just starting, Charlie. This is just happening. And so think about how many jobs it takes to rebuild airports and freeways and ports. The job demand from these acts is going to be enormous. And so here we are talking about commercial real estate as it may be a problem, but the stimulus that we're going to see in the other parts of the economy is extraordinary. And owning companies that are involved in the rebuilding of our infrastructure, these are going to be good long-term holds.
Well, some of that has to do with what you have been behind for many years, and that's ESG,
right.
Environmental, social, and
we
governance.
could say those words, right?
I don't say them anymore.
Oh, my God.
We won't go there.
Larry, much of the nation is broiling hot right now.
Yes.
We can throw up a weather map, and it is pretty unbelievable. A lot of records have been broken, particularly in the Southwest. Texas is melting records. The town of Tahoka broke a 110-year-old record. It's been nuts. They hit 116 degrees. Last week, the state hit a new record for electricity demand.
Yes.
But what's interesting is much of that demand, as conditioners are running at full speed, comes from sustainable.
Yes.
So whether that's solar or wind.
Yes.
It's filling that demand. And yet, the state of Texas doesn't like you guys.
No, look, Texas is, but people don't understand. Texas is the #1 state now in renewables. It is also obviously the largest state in terms of traditional energy, traditional power. And so we look at this, that we need power in both traditionals and renewables. And we're going to be announcing a big transaction with a traditional energy company that's heavily in the gas. And we're helping them move towards more sequestration. And so our job is to be working on behalf of the asset owners. I mean, we're the largest asset manager. That means none of the money is ours. We're working with all the asset owners and trying to help them on long-term solutions. And part of the long-term solution is working on decarbonization. And hopefully we could develop new technology to bring down the cost even more.
Let's be clear, Charlie, and you've seen this. BlackRock has hundreds of funds with fossil fuel
Totally,
companies.
200
we
billion,
can
right?
put
Is
up
that
a
the
bunch of them
we're
right
more
now.
than that. Worldwide, over 380 billion.
Correct,
That's
380 billion, and
That's
it's
amazing.
something like
We're the largest-
500 of your funds or have at least one or two names.
So you're the largest
within them.
sin stock investor in the world.
Well, I want to call it sin stocks. We have to rely on traditional energy. At the same time, we need to aggressively build decarbonization technology to offset the demand. But that's going to take years and years and years and years. And and so the question is, do we have the time? You're talking about record heat. The thing that I focus on, and we're not spending enough time on, is what's going on in homeowners insurance. In the state of Florida and the state of Texas, state of California, major property and casualty companies, big brands, are leaving the states because they can't elevate the price to meet their returns on homeowners. And we're displacing, really a large segment of America today that are not going to be able to afford homeowners insurance if they are in an area of risk. To me, that's where climate is investment risk. And that's what I wrote about.
So why not say ESG anymore?
Because it's been weaponized by the far left and weaponized by the far right, and we lose a conversation.
Maybe go to GSE. I can't help but laugh about this because it sounds so. The attacks on you are kind of absurd because I see Texas coming after you on ESG. I see Republicans. I see that guy from New York, Brad Lander, the control of New York.
Attacking us, not doing enough.
Not doing enough. We want you to get out of all of it. And you say, I can't do that.
And we can't look at our job is to do what our clients are asking them to do. And we do a very good job. And despite all the narrative last year, we were awarded over $400 billion in net new assets.
Yeah, you guys have $9 trillion now, right?
Over $9 trillion.
Yeah, no one's holding a gun to their head.
No, but our clients are coming to BlackRock more today than ever in the history. So despite all the narrative, because we're a fiduciary, we do what our clients are asking them, and we have good performance, and we've been right on market calls. And,
that's true.
And so
people forget your background as a bond trader, as a risk manager. I mean, you created BlackRock from nothing. It was dedicated to risk management, correct? Because of your experience in the mortgage-backed market back in the day. Yeah. And you've been really good at that for a really long time, and it gets sort of swept away. I know too much about you. I've known you for years. You look the same, but you're not. But you are getting older.
I am getting older.
I'm not going to ask you, by the way. I know. Trust me, I know that. Are you going to step down anytime soon?
There's no plans. I mean, I love my job, but at the same time, we are really building a management team.
Right.
It's not about one person. I mean, everyone thinks about, okay, who's that named person or named two people? We're spending so much time in making sure we have a team. And I'm very proud of the point right now that I actually believe when the time is right for me to stand down, that I actually believe we elevate one or two people. And I believe the majority of those leaders who are thinking they have that opportunity will be at the firm.
So they're at the firm. It's not going to be like some people say. Maybe you'll bring in Greg Fleming, good friend of yours.
No, absolutely not. But what I'm trying to make sure is that when there's that time, it's not we anoint one or two people and three people leave. I'm trying to build a team that whoever is named 1 and 2. That the remainder team wants to be part of that new team.
Let me ask you about...
That's about how to build an organization.
Let me ask you about two competitors.
Yeah.
Start with Morgan Stanley. There's a race to replace James Gorman at the top. Andy Saperstein, who runs brokerage. Ted Pick, who runs risk. Who do you think?
I wouldn't know. I mean, I think James has done a great job of having 3 people who are next in line, and the key is the same idea. Hopefully, whoever is named, the other 2 stay on. That's what you want. You want to. You don't want to have what happened in GE historically when one person annoyed it, and the whole team dispersed.
Well, Jack told him to leave, didn't he?
Yeah, and I think that history will show that that was a mistake. We're trying to build a team, and elevating one or two people doesn't mean other people are losers. And we're trying to keep continuity and making sure that we have a management team that is ready to run in and become better than what I've done.
But it wouldn't be that guy like Iger who's, I'll come back. Let me come back and save the day.
That would be a disaster.
Why?
Because I don't, you know what? I want the next team to be better than me. And I'm
see very few CEOs say that.
No, but
then
I'm
they
a
get
founder.
annoyed when they're successful.
I'm a founder, and I think founders.
Well, that's right. You created this.
And I want this firm to do so much better than.
But look what's happening at Goldman. This is now. If you don't want to answer it, I'm not going to bust your chops.
I'm not going to answer it. So.
But look, it's clearly a little this give and take between Lloyd Blankfein, the former CEO, the current guy Solomon, and Lloyd going around saying he doesn't like the fact that David does.
I will not be doing that. Whatever that may be.
Do you think David? Wait a second. Let me ask you.
I hope I'll be, enjoying my grandchildren.
You will be.
Okay.
But I need to ask you: is that guy getting a bad rap? Not you. I know you are, but David Solomon.
I think David has done a good job over time. I mean, it's obvious that there is a schism within the organization, and I think David has led the firm properly. Mm-hmm. I think he's elevated the firm. The firm is a better firm today than it was 5 years ago. And so I don't know the inner dealings. I don't spend much time focusing on the other firms. I spend all the time making sure we're doing the job right for our clients.
Okay, we got 30 seconds left, Larry. What do you think is the most important thing this country needs right now?
Solidarity. We need to bring back hope. So many Americans are losing hope. And the polarization of opinions, of fighting, it creates more fear. There's more fear in America today than in my lifetime. Fear about the future. You're seeing declining birth rates in America. You're seeing that people are frightened of, is tomorrow going to be better than today? I know when I was a child, I knew that the future was going to be better than it is today, and I built BlackRock on that belief. We need that. We need hope.
Our stage guys are agreeing with you, by the way. I saw him shaking his head.
Thank you, Larry.
Bitcoin has climbed by about 20% since June 15th. That's when BlackRock said it was filing for SEC approval of a spot Bitcoin ETF.
For a while, everyone was sort of looking at crypto and they weren't as interested as they were in the pandemic. And now everyone's been talking about crypto ETF performance again this year.
Bitcoin extending its run higher, briefly topping $30,000, and it comes as Wall Street is giving the sector a vote of confidence.
This is just a week of excitement. That doesn't mean it's going to stay up next week. These things move really fast in this world.
Investors should take away that this is anything but bearish for the future of institutionally adopted, regulated cryptocurrencies, not just in the U.S. but globally.
So there's a lot going on here, and we're kind of getting a sense that it's maybe a winds of change for the sector.
Brady, what about the odds of the Bitcoin spot ETFs getting approval, right? Because they've tried
I say
this
no
before.
way in the Biden administration. I say no way in the Biden administration. That's my call.
Live from Bloomberg's World Headquarters in New York City, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the race for a spot Bitcoin ETF heats up. BlackRock and others with a flurry of refilings. A possible silver bullet to help get a fund across the finish line.
We'll talk to the CEO of CF Benchmarks about this rush for an ETF. The company is one of the world's leading digital asset index providers.
And a Bloomberg News scoop on bankrupt crypto lender Celsius. CFTC investigators conclude that the firm and its former CEO broke rules before the ultimate implosion.
All right, so all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And of course, as we've been talking about this rush to a spot ETF, that really has provided a boost for Bitcoin and other digital asset prices, but not so much today. Bitcoin down about 0.5%. We're still north of $30,000, but of course, this is part of a broader sell-off we are seeing in riskier assets. Ether 2 down about 1.3% as we're seeing stocks dragged down by the strong ADP jobs data we got earlier this morning. Feeds into the idea that the Fed's going to have to keep going for a while. The NASDAQ 100 to kind of illustrate that sapped risk sentiment is down by about 0.9%. One outlier I did want to point to, though, is Bitcoin Cash. This, of course, is kind of a derivative of the OG Bitcoin. It has seen a massive rally over the last several weeks after it was launched on EDX, that new exchange. It had a little bit of selling pressure over the last several days, but about 8%. We understand South Korean traders may be behind a lot of that, but it is up about 200% year to date. That pretty much dwarfs Bitcoin's 80% year-to-date gain, though certainly, Matt, that's nothing to sneeze at either.
No, I'm also starting to notice a lot more flows into crypto-related ETFs. I've got ETF Go up here, the function that we use every day on ETF IQ, and Eric Balchunas pointed out yesterday that we've seen 1 month flows of $533 million. Now, that may not seem like a lot, but if you look at the year-to-date flows here, you can see that we're only up $456 million. That means for the entire year, with the exception of last month, we've seen negative flows, a real pickup in June, Kaylee, as these ETF filings started to push investors into crypto-related ETFs globally.
Okay, so let's have more on that point. As we've been discussing issues